So again,
Order submitted.
welcome.
Order submitted.
Oh,
Order submitted.
we just got
Order
the
submitted. Order filled.
we just got the tradeometer to trigger, the rockbot to trigger. That's even better. The rockbot just triggered off the 1 minute time frame. See, the thing is, I could see these pretty fast before they, before the bot is going to finish out with a candle. So we got in a little early on that, so we were able to get a little profit right now. But not everyone's going to get on the right timing. Divergences are very tough with the timing overnight like this. I'm happy there is one. So let's put it on this screen right here. Yeah, there's a little there. I could see this going up here now, just a little. I mean, we're just having fun with it. We're playing the penny slots tonight. We're slumming it. Anyway, what I wanted to do is actually just go through the week and kind of point out the setups we should have taken. We'll start here Monday morning. This is last Monday here, and I'm just going to go through it real fast, almost a fast money type of fast lightning round kind of thing here. And I like to do this whenever I do my coaching segments. I like to do this for some of the traders, is kind of run them through the market back, go back a few days, and then tick by tick, candle by candle. I want them to trade in front of me. Like I'll just move this candle up here, and you tell me if you're going to do something. You tell me when you're going to do it, and we'll just move it, and we'll kind of play it a little fast, and then you'll see something and say, all right, I'll take a long here, and then we'll see how it reacts. That's what I like to do a lot here, because it's kind of on the job training here. Like there was a little divergence here at 8:10, 8:15, 8:10. So right on the VWAP too, and it was a hard divergence to see. It's not the best, but divergence is mathematical. It is easy to see if you think about it. If you could see it, then it's definitely there. I mean, there's times where it could be very choppy, and the candles, it could be a flat line. You won't see it, but here you could see it in the low, and that's always the best kind. The best kind is where you see that steep second. That means that the momentum is shifted faster. It's more bullish. Everything is good about it. And the thing is, right when you establish a divergence, your divergence is one setup. If it doesn't work, it's not a divergence, and you don't want to be part of it. So it's very easy to put a stop in, a very tight stop, because once you see a divergence play out, you have some upside. It's very easy to manage it, and then who knows where you want to take it. I mean, that's the hardest part of trading with this type of method, with the stochastic divergence method. It's easy enough to spot the setups, but it's hard to gauge where you want to get out. And so you have to play it. You have to set yourself up as a business. Make this a business for yourself. Understand that you should be getting out at certain. The market doesn't owe you anything, so there should be a reason to get in and a reason to get out. One of those reasons to get out is that 9-3 rotation, and lots of times it'll stay up there and it'll continue to move higher. But that's a good way. That's a good spot to start taking profits. So you take profits into the 9-3. You put your stop at break even, and then you have a free trade. So I mean, it is it's something that you have to be in front of it. And this is also what we call a quad divergence, which makes this a super signal. And the super signal is something I've now just really decided just to teach. I'm going to just say, you know what? I'm not going to teach anything else except the super signal, because that's how people are going to be successful. If they have the patience to wait for the time frames and the divergence. This only happens, our divergence happens, say, 3, 4, 5 times a day. But if you have a quad rotation diversion, maybe that happens once or twice a day. Maybe lucky to do it once. Maybe a couple of times a week and stuff. That's where you have that perfect. Well, maybe once a day on average. So you want to be in front of that. And that's probably the best setup. And you very rarely see that fail. And even if it does fail rarely, and when it does fail rarely, you have a defined stop. And that shouldn't discourage you. Taking a loss on something, a divergent setup, it's not the so-called holy grail. Sometimes I goof about it and call it the holy grail, but it's the closest thing you're going to get. Everyone's going to self-destruct. It's going to be your mind. It's going to be over trading. It's going to be chasing the markets, getting angry, and not paying attention to the rules. Define your whole trading strategy by a set of rules and stick to them. My role is, here's a good example, all right? Excellent example. And this is a special. This is a key thing. This could be a lesson right here for anybody listening right now. This is a lesson. There's a couple times divergences don't work. This is gold right here. All right? Maybe I should turn off the recorder. Only keep it for us. There's times when a divergence doesn't work. Not too many, but when it doesn't work, sometimes it doesn't work because it is a running divergence. And if that happens, that's very easy to spot. And a running divergence is actually a better setup than a regular divergence. The problem is when you have a divergence here, and you're keeping it real tight, and you have that divergence, you have that low, and it came back up, and it started pulling back, and then maybe you decided to take it here, and it spiked a little higher. Or this is not a great example. It's when you have a high and then a higher high, but the second high, like here's a high and there's a higher high, but it's still underneath the divergence high. So if the price is going up and the stochastics continue to turn over, even if you had a divergence, then you had another divergence. That second divergence is very important. It's called a running divergence, and it usually triggers right at the second time. But you have to have that rotation, has to be under the original high. All right? It can't be going back up here, even though this is going back up. And that's really important. I mean, it's easy to spot once you get used to it. And I'll show you better examples of it. Because I almost left this part out, had it on pause. Even if we do find a micro divergence like that and say, all right, I want to get in it, you have to still abide by the rules, meaning the market's not giving us a lot. There's not a lot of volume and stuff. And the momentum here shifts very easily without no price movement. So I spotted a little divergence there. And at one point, we're up like $15. And we hit that 20-period moving average, and we hit the 20 here. And that is just telling you, straight out that this is still embedded. This is still telling you that this is probably a better opportunity as a bear flag, because that's what it just told us it is. So right when it hits that 20 line and you're underneath the 20, that's a bear flag. Even if it's on this micro level, look at how it reacted off of that. So that is the other setup you want to always take. And it has to be exact. You want to look just like this. Rotation on the 9-3 up against the 20, close, and I always say let it close below the 20 or above the 20, depending on if you're long or short. I like when they happen at the same time. That the 9-3, this is on the short side flag, we call a bear flag, a 20-20 bear flag, but it's it's really about seeing that divergence, getting in, and then watching this as it hits 80. And the price is right on the 20. That's it, where you want to take the profits, even if you don't even have any. It just protects you. It makes a lot of sense to do that. If it sets up again, you could always get back in again. But the odds are you're going to get a little pullback, and that little pullback might just be enough to shake you out. You don't need that, especially when you could call it. You know exactly what it's going to do. It's going to pull back before going. And there it goes. All right, here you go. Sorry about that dead air. The Rockbot just took another divergence signal right there, and you see how close that stop is. That's because it's at the candle low, divergence candle low. You could adjust that on your parameters if you're trading it on your own machine to give it a little bit more room if you wanted to, because that's really tight. But hey, we're just letting it run, and I'm not really managing it. If we manage it, we'd want to actively move our stop and maybe take profits when we get that 9-3 overbought, And I usually do that during the day, so. We'll manage it tomorrow a little bit better. So I'm going to go back. Let's see, let's go back now.
Order submitted. Order filled. Order submitted.
300 tick chart.
Order submitted. Order submitted.
All right. We're going to see what's going on here. Very rarely do we get two on the same board. Typically, I love that. That's what we call a super signal. When you have two of the four, usually 3. I'm using just a time frame. There's the 1, 3, and 5, or 1, 3, and 5 that way. And this is a 300 tick up in the upper right hand corner. So I prefer to have 2 out of 3 out of the time frames. So a lot of this is very interesting because I like to base my studies off of this. Statistical studies, and when you start to see them live like this and see how they work together, you just put that in the bank. Next time you have that set up, you'll remember it. And it's going here. It's going. I mean, I have. You can see if. Let's go back to that chart here. And that's going to take a while to play out too, because the volume is.
Order submitted.
Oh my
Order
God!
filled. Order submitted.
It's a 5.
Order
It's a 3 out of
submitted.
5. This is a rare event. This is a rare event. I've never seen a 5 out of 5 before. I mean, a 3 out of 5, 3 out of 4. That's the 5 minute. The 1. I'm all confused. That's the 3 minute and the 1 minute and the 300 tick. Wow. Look at him. I totally geeked out on that. All right, well, let's go back to the other chart here. Let's not waste our time watching this. It's going to do what it's going to do here. So we're going to go back in time again. And I'm just going to show you some important setups. You had some golden nuggets already about the running divergence is just key. It's absolutely key to kind of keep you in a good trade if the market gets a little crazy. And we talked about the flags and how important that flag is. And we pushed up against the 20, and this hits the 20 at the same time. See, this is a perfect flag here. Now, you might see like a flag here. See how the 50 is right there with the 20? I kind of put the 20-50 together. When they're that close together, I just say, all right, if it's going to hold one of those, it's going to hold either the 50 or the 20.
Order filled.
I like to have it right on it, though. The market here continue to move higher as a super signal really hit live here today. That live super signal, excuse me, it's just taking off on all charts. So remember this. Remember this. When you have this on the station, when you get the triple setup, it's time to step up to the plate. Back to the other chart there. All right, so here's the same thing. Here's move up, and again the overall trend. Always when you're looking at flags, always take in consideration where the 200 period moving average is. If we want to be underneath that, we want there to be a trend. Trends are important to identify flags because they're continuation patterns. So, you need to have a trend. So a strong trend gives you those little flags, flag, and you're able to identify those. But it's great to be able to know that you're on the right side of the market, instead of saying, oh, this is going to be the bottom, I want to go long here, and keep getting shaken out. Take what's obvious. This is the 60-10 is golden here, telling us the weakness is in. Every rotation should be shorted. We have our first bounce comes back down. We kind of got a quad rotation here. And we started lifting. Nice. And you can see here, here's a good example of a running divergence. So you have that high, then you have that lower high right here, and then then you had the lower high. So that is a great running divergence, and it's right up against the VWAP too. And it's just a good understanding of markets. If anything else, we're not involved. We're only involved when our setups come around. That's going to prevent you from over trading. I mean, guys, look at this. They're all taking. I mean, I would probably take profits now as we get overbought. Wouldn't probably stick to the parameters overnight if the range is not there, but we'll let it run. We'll let it continue to run here. That burrito was so good. All right, back here with you. Just letting things go on the triple threat. We decide a name when all three charts, three out of four, line up. That's called a triple threat. It made some movement. It actually was up nice. So again, like I said, you probably should have taken your profits on the rotation of the 9-3 and just let the rest have a break even stop. So market here going through, and again, I'm asking some traders here if they see anything. What do you see here? We're only looking for 2 setups, really, maybe 3. I mean, the variations of these 2 setups could be considered, multiples. They have to have the flagpole, the pullback. This is kind of, it's about that 60-10. It's embedded here. You got the rotation down. You're holding right in the 20. It takes a few minutes before it actually engages. You'd like to see these things, but you always want to buy right when it hits the 20. Remember, I keep on talking about that. Buy right when it hits the 20. All right. It didn't stick down here that long before it started rallying. Here we had another good example of it. And we were holding the 20 pretty good. And that rotated back down just below the 20, or just above the 20. It didn't really get down there. I mean, it was right there. That one candle was there. And again, the trend is strong. Same thing here, a lot of flags. And there was a divergence on the top here. And that was key. That was a nice divergence to move down. It moved all the way down until it got oversold. Did get oversold here a little, and then bounced quickly and then failed. So again, your stop is always going in the one tick above the candle high. Here we have a nice, just a good example. We had like kind of a little trend line, 200 period moving average, and this kind of ramping. Stochastic started to ramp back up. You can see it good on the 14.3. And, these candles being put in here, and that first real good candle turned that back up. Right when that turned up the last time, that was your signal. Market here still running on this. Look at that. I mean, that is impressive. I got to go back to it. Live action here. 5, 100, 157, 125. So you can just take profits. Now it's a triple threat, Johnny. You got to go all the way. You got to let it go. It's probably the bottom. I'm so glad I caught it. This is like catching Bigfoot on camera. Back here. All right, well, That's the futures update. I was going to do a little bit more, but I think I gave you some nice gems right there. The flags are working out great. The divergence, you got to put your stop in there. The running divergence is a great one to just recognize if you get stopped out, but you see the higher low, you need to step into it. And you got to be patient. Again, big divergence up here. Look at that. Double bottom, big drop off here. How far does it go? You know, what's your game plan? What's your exit strategy? It's gonna be difficult. Not every setup you're gonna get perfect entries and perfect exits. It might be frustrating. A lot of break-even trades, but there will be little losses. All right, and then that'll tighten up. You'll feel more comfortable, more confident. And with the confidence comes saying, oh, divergence, oh, let me lay out more contracts. Having that confidence, now that little move actually is worth it. A lot of flags. So this week here, we're after after all that news last week, it's not much this week. Some more earnings and stuff. Beautiful divergence back here, up here on the top. Nice flags. Holding the 50 right there. You buy into that 50. You want to see at the 20, it wasn't even at that level there. You know, at the 20, it wasn't there. It wasn't at the 20. When we broke down and then got to the 50 and we were on the 50, that's your 2050 flag. Same thing. And again, I'm always better to kind of, you know, get that little rotation in your favor. Market here still rallying hard on the triple threat. I'll leave you with that. This is the Rockbot channel. It comes with all memberships here at Day Trading Radio. If you happen to see this video, you get it. You get it running overnight here. You would have been up 150, 200, 300, 400, 500. 500 and change. All right, you know what I'm saying. All right, good night, everyone. I'm going to send this out. I'll catch you in the markets tomorrow. I'm still trading tonight, though. Oh my God, there it goes. We got to watch it now. Oh, it's just taking off. It's just taking off. The triple threat. It's a beast. All right, John, get off.